All right, let's get right into it. Today, we're unlocking a set of really powerful templates for reading the daily story of the stock market indices. By the end of this video, you'll learn how to see the narrative of the day as it's being written, not just after the fact.
Welcome to AI Explains ICT. In this video, we are diving deep into ICT's core content, specifically Month 10, Episode 14, which is all about index trade setups. You're definitely going to want to grab a notebook for this one because we're about to break down some models that can bring a whole new level of clarity to your daily analysis.
So, here's our roadmap. We're going to start with the core analytical tools you'll need. Then, we'll explore 3 very distinct daily profiles: trending days, reversal days, and consolidation days. Think of these as templates for understanding the daily price story. And finally, we'll look at a real-world example to pull it all together. Now, before we can get to the specific daily profiles, we've got to lay the groundwork. Let's cover the 3 core analytical tools that are really the engine behind all of these setups. First up is a concept called SMT, or Smart Money Technique, specifically Index SMT Divergence. This thing is a super powerful signal we get by comparing the S&P, the Dow, and the NASDAQ futures. So, picture this. 2 of them make a new low, but the third one just doesn't follow. That failure to confirm, that's a huge clue. It's a leading indicator that the market might be finding a bottom. And of course, the same logic works in reverse at market highs. Next, we have the PD array, which stands for premium/discount array. Think of these as key price zones on your chart and usually spot them on a 15-minute or 60-minute time frame. They basically act as objectives for our trades. The rule here is simple. We're looking to sell at a premium and buy at a discount. And when these arrays line up with a higher time frame level, their significance gets a whole lot bigger. And finally, time of day. This one's a game changer. It's the idea that significant price moves aren't just random. They often happen in predictable windows. Key times like the 10:30 to 11 a.m. New York window, often called the London close, and that final hour of trading into the 3 p.m. bond close. Holding a trade into these windows is often how you capture the biggest part of the day's move. All right, with our toolkit ready to go, let's look at our first category of daily profiles. These are designed for those days where the market has a strong, clear directional bias right from the start. So this first profile is the 2-session up close. The basic idea here is that we're anticipating a bullish day. Our objective is to find a pullback in the morning session, get into a long position, and then hold on for an expanding range higher for the rest of the day. So how do we actually trade this? Well, in the morning session, we're on the lookout for bullish SMT divergence on the lows. That's our big signal that buyers are stepping in. Then we patiently wait for price to pull back into a discount array to get our entry. Now, the crucial part here is to hold that position through the afternoon, trusting that time of day concept to push price higher, with our final target being a 15 or 60-minute premium array near the close. Okay, now let's just flip that idea on its head and look at the mirror image, the 2-session down close. As you can probably guess, this is our template for a strong, bearish day. The goal is to sell a morning rally and hold that short position for a sustained move lower right into the close. The sequence here is the exact opposite of what we just saw. We start by looking for bearish SMT divergence at the highs in the morning. Once price rallies back up into a premium array, we've got our short entry. Then, we just hold on, relying on time of day to expand the range to the downside, with our final target being a 15 or 60-minute discount array. Let's move on to our next category, which is all about spotting those major turning points. These are the days where the morning trend is a complete fake out, and it's setting up a really powerful reversal in the afternoon session. This profile is the AM rally PM reversal. It's fascinating, really. It's like a 2-act play. The market puts in this convincing rally in the morning, which sucks in a lot of buyers, but this whole move is just a setup for a major sell-off in the afternoon. So, the day starts with a buying opportunity on bullish SMT at the lows. The target for this morning rally is a key 15 or 60-minute premium array. Now, this premium array is the crucial pivot point. Once price gets there, we flip our bias and start hunting for bearish SMT at the highs. That's our signal for the reversal, and our new objective is to short the market, targeting a move that takes out the morning's lows. And here we have the opposite scenario, the AM decline, PM reversal. A sharp drop in the morning creates the perfect conditions for a powerful V-shaped rally in the afternoon. For this profile, the morning session offers a short trade after we see bearish SMT at the highs. The downside target is a significant 15 or 60-minute discount array. And just like before, this array is the key. It acts as the launch pad.
Once price hits it, we look for bullish SMT at the lows to signal the reversal. From there, we go long, anticipating a rally that will attack the highs from the morning session.
All right, for our final category, we have consolidation days. These profiles apply to days that are more range-bound, and they just don't have that strong directional follow-through we see in trending or reversal setups. This profile shows a consolidation day that features a morning rally followed by an afternoon decline. Essentially, the morning move just runs out of steam, and price gravitates back toward the middle of the daily range instead of breaking out to new highs. So here's the sequence. The morning session sees a rally up into a 15 or 60-minute premium array. We then look for bearish SMT at the highs to confirm that the rally is pretty much exhausted. In the afternoon, instead of expanding higher, price begins to decline. Now, the crucial point here is that our target is not the morning low, but rather the daily equilibrium, the midpoint of the range. The profit objectives are just naturally a bit less ambitious on these types of days. Okay, we've covered a lot of theory. Now, let's see how this all comes together on a real chart. We're going to analyze a trading day using these exact concepts to see them in action. Take a look at this. We have the S&P at the top, NASDAQ in the middle, and the Dow at the bottom. I want you to pay close attention to the Dow. In the morning session, you see how the S&P and NASDAQ both make lower lows, but look at the Dow on the bottom chart. It refuses to confirm. That's our bullish SMT divergence, and it came right before the big rally. Then, in the afternoon, the NASDAQ pushes to a higher high, but the Dow makes a lower high. That's our bearish SMT divergence, and it's signaled the afternoon decline. It's beautiful, right? And this slide just ties the whole framework together. The table breaks it down perfectly. At the AM session low, the Dow's failure to make a lower low gave us that bullish SMT divergence that led to the S&P rally. That rally ran right into our target, an old premium array. Then, at the PM session high, the Dow's failure to make a higher high gave us the bearish SMT divergence, which started the whole afternoon decline. Every single piece of the puzzle is right there. So the crucial point here is this. Once you start looking for these daily profiles, you stop seeing random noise and you start seeing a potential narrative unfold in real time. So the question to ask yourself is, how can these templates change the way you approach your daily analysis? If you found this breakdown helpful, please go ahead and like this video and subscribe to the channel for more. If you have any questions at all, just leave them in the comments and a human will get back to you. Safe trading.